Hey guys,
B, what's up?
how's it going?
All good. How you doing?
I'm doing good. Can't complain too much.
Oh yeah, we know you doing good.
Funny.
We know you doing good.
Too funny, bro.
What's up? What's up?
Nothing much, man. What's going on with y'all? How's y'all's day going?
Just came back from the gym, made some tacos.
Ooh, what kind of tacos you made?
Just ground beef, but avocado, some green salsa, cheese.
Ooh, that
Sour
sounds pretty
cream.
good right now.
Yeah.
Taco Tuesday.
Shoot, that sounds really good right now, and I'm not hungry. So, talk to me, guys. What kind of questions y'all got for the day?
Hey, I still wanted to go over that Euro USD trade you took. I just want to, so we get like a top down on that and just like your thoughts behind that whole trade.
Yeah, sure. I'm also going to do a trade recap video too. For some of
Are
them,
you on YouTube?
yeah, I'm gonna start adding some
Okay,
trade
dope.
recaps as well too. I've been forgetting to do so, but let me go ahead and share my screen. I'll go ahead and walk you through it, guys. Okay, so first and foremost, the way I start every trade, any kind of trade concept that I do is I'm always looking to see, all right, where we are with market structure, because the most important thing, I don't care about catching trades. We want to make sure that we take the right trades that are aligned to where the momentum's going, because if we do that, we'll be on the right side of the market 8 times out of 10, and catching winning trades will be a consistent process. So the first thing I look at my market structure, the market was bullish because the trend was actually bullish, right? And from there, we also knew that the market was going up. So my bias was that the market was going to go up. So we go down to our 15-minute, and it came to our 15-minute time frame. Market had been moving a little bit sideways. It made a break somewhere around early this morning, around London open. So my expectation was that price was going to continue the order flow, which the order flow was currently bullish. And so I was expecting for it to continue upwards. I waited until it made a pull back into my POI. And then from there, I didn't actually take this on the 1-minute time frame. I took my entry off of 15 seconds. And so the market pulled in here. I'll drop down real quick so y'all can see it. But the market pulled down here in 15 seconds, gave me a chalk, gave me a BOS. And after that first BOS, I ended up taking my entry here. I know P-money is going to ask, so my stop was 3.1 pips. If you had taken it on M1, you also could have taken this M1 entry. It had provided a chalk that you used that you could have taken your entry. And so price went up, gave me a good reaction from this POI, showing that it had some momentum to it. We ended up having the news. So something would tell me with the increase of insurance, with the increase of unemployment claims that we had, and the unemployment rate going up, more surprisingly, and the amount of things that we've had, the amount of just stuff that we've had going on with the economy where it comes to the bank failures, and now it's harder for companies to get funds, and now they're doing more layoffs, and some people they're having to probably take away some jobs as well. So now we're seeing weakness in the what's it called, the jobs part of the business. I was expecting soon that we might get a beat on, a loss on the jobs openings. And so I just took my chances here. Not something I recommend to do, but I used, like I said, past data that gave me kind of a thought process. Okay, it's more likely that it does. If it would have failed, then cool, I just would have broke even, or probably would have lost some due to slippage. But I ended up having this strong break because the miss on the jobs was bigger than expected. So for that, the market ended up sending my price upward and upward. And by the time I got to about 20 something R, I just went ahead and decided to go ahead and walk away with my winners. So that's pretty much the thought process that I had. Any questions you got?
Wow, that's nice. I thought jobs was going to be up, like, because I seen the past few 5 of them were up. So I thought they were going to be up.
They were up, but if I remember looking at correctly, when you look at the last 4 or 5 months, the jobs numbers were still coming down. They were just beating the expectations. So the expectations was that we'd start seeing a drop off, and that drop off, it never came. So because of that reason, that's what I thought it might come in. When I saw how close the previous number was to the forecast, I was like, oh, okay. So March's job numbers were high, came in, 11.2. But before that, they had been dropping and going steadily downward. So I just kind of expected that soon, especially with the impact of all these layoff announcements that companies had, that it was going to have to come eventually. And today happened to be that day. So, hey, Julio, no problem. If you got any questions, feel free to ask in the chat, guys, if you can't come on the audio. So I'll make sure we can get as many questions as we can. Yeah.
Can I go over my gold trade, please? Can we?
Sure thing, brother. Go ahead and share your screen.
Okay, can you see?
Mm-hmm.
All right. So this is the 4 hour. This is a supply zone.
Okay.
And I understand this is 1 touch, 2 touches, 3 touches, 4 touches, correct?
Yep.
Okay, I understand it's weak. Okay.
Mm-hmm.
So I'll delete this for now. We're in the supply zone, 4 hour supply zone. So bam, I come here. I see a 15-minute. I see a 15-minute supply zone. So I'm up 4:15. I'm up. Let's go to 5-minute. So I'm up. Price coming to the supply zone. Actually made it low right now. Let's go to the 1 minute.
Okay.
This off the 1 minute. Did not take that.
So wait, did you use a middle time frame to use a supply zone?
15-minute POI.
Oh, okay. I missed this part.
15-minute POI.
Okay.
So I'm now looking for sales in the morning because I see a 15-minute POI.
Mm-hmm.
So I'm on my POI. Price chocks. Oh, did it? Bam, price chock. So I take my trade somewhere like right here. Really took it was like somewhere like right here. I think it ended at a 20 pip stop, I believe. So I'll take it somewhere right here. Price takes me out. And the 15-minute, I guess it faked me out today because obviously that was a 15-minute chock. But when I go to the 1 hour, I see a 1 hour chock And I know when I run a fib like on a 1 hour chalk and it has like a lot of stays around 23.6, it's like still a lot of buying pressure here. It doesn't want to go down. And I see it was still buys, but I just went straight to the 15-minute and it faked me out today.
So go back to your, so where did you enter on M1?
Lower low. Price came in here and enter right here. Right here. Because and then I have a thought process. I'm in a 15-minute zone.
Go back to M1. Go back to M1. I want to take a look at that real quick. Sorry. Oh, okay. Got it.
So this is just a failed trade.
Yeah.
Okay.
From what I can see, I mean, you're putting a lot of hope in that chalk, and that chalk to me wasn't very strong.
I thought this was pretty strong. Look at the small candles. I remember you talking about that. Price came up, shot down. I thought that was pretty small. I thought that was pretty strong.
No, there's multiple pullbacks in there, and plus you can see the market wasn't moving that strong. It ended up making a form of consolidation right there.
Mm-hmm.
Did you moved your stop to break even to prevent a loss though, right?
No, I took a L.
Okay.
I took a L because hey, it was a trade. Price chopped. You know.
So it makes one touch here, one touch down here. This comes into the region of that one. That's a third touch. This comes into the region of this candle. That's a fourth touch. You're now moving sideways. You're not moving upwards or downwards. So I wouldn't consider this to be very strong. But that's the thing you have to watch is for the sideways movement, right? So when you look at the movement going upwards, it goes down and pushes up, it pushes. It goes up, it goes down, it pushes. It goes up, goes down, it goes pushes. But hardly ever are you seeing it stay within the same high and low, at least at 2 times on the high and 2 times on the low. That's a sign of consolidation. The consolidation is the kryptonite of any trending strategy. So does that make sense, P Money?
Yeah, kind of, but quote unquote, this is still the plan right here.
Right. That's your current conversion plan. But what I'm saying is you're putting hope into a chalk, right? And so not every chalk is going to be the same, right? So this chalk looks strong. That chalk looks strong. This one does not look strong. But what you're going to need to add is you need to add more criteria as to, all right, when the market chalks, what am I seeing? Because like I said, not every chalk is the same. That's why I don't take trades on just when the market chalks. I don't just take a trade just because it chalked. It's got to show additional criteria in addition to the chalk. Chalk gives you, you got to remember, a chalk is not a confirmation that the market's changed. It is the probabilities have now shifted that it could start going down. So if you're going to make that, trade and you say, all right, here it chalks right here, right? My expectation is the market's going to go down and keep on going down, right? You can't do it just based on the fact, well, it chalked, therefore I should enter a sell trade. That's not enough criteria. Because sometimes every chalk is not treated the same. So this one came up from this high, it came down, wicked through, comes back up, comes right back down. Why did it wick through? Why was there enough bullish momentum to push price up the first time it tried to go through? That's the question that in backtesting you need to kind of discover more when it comes to looking at your chalks and making sure that, all right, this is what I consider to be a strong chalk. To me, that's not strong. Because that wick represents that the buyers did not want price to go that low. It did, and then as soon as it did, look at what it did. It couldn't even go back further downward. It tried one time here, tried again here, tried again here with the final push, and then price went straight to your stop loss. Does that make sense?
That's why I like on 15-minute POI, especially like this big. That's why I like to go. That's why I like to go on a 3-minute, because the 3-minute, I wouldn't even have to even deal with that type of stuff. Like,
Mhm.
like it's just it won't even chop on a 3-minute. That's why like when it's big top POIs like this, the 3-minute just doesn't fake you out as much as the 1-minute time frame, because if I see this on a 3-minute time frame, I'm taking even the 1 minute. I mean, this looks juicy to me, but that's why I kind of use the 1 minute inside of a 3-minute POI sometimes, because like I was like, man, I should have just hopped on the 3-minute today, and then no type of chalk nowhere in sight.
Well, the more you keep, like I said in the last call, the more you keep using that 1 minute side of a 3-minute, you're going to get faked out, and you're going to take a lot more losses. It's not giving you a benefit as much as you think, because that's partially what contributed to this loss. Like you said today, like you looked 3-minute, you wouldn't have taken it, but you looked at it from the 1 minute.
Well, yeah, I looked at the 1 minute and I lost.
Mm-hmm. But did you say you also looked at the 3, or are you saying if you?
No, I should have. If I would have just paid attention to the 3 today, I wouldn't have took a loss.
Oh, okay, I got you.
Yeah, if
I
I
get
don't
you.
pay attention to 3 today, there's no way I can take a sell here. No, there's no chop on the 3-minute. It's only going to chop on the 1 minute. But yeah, but as far as the plan goes, this is pretty much it. 15-minute POI, right? Look for a sell. It just took an L.
Yeah, but I still mean what I said about
about the chop, yeah.
About strengths of moves are important. So the reason why I have M in my strategies remind me everything I have to do is based on momentum, because if you have no momentum, there's no point of you getting in a trade. There's nobody going to be able to back your trade. I can't move the market. Neither of us, none of us on this call can move the market. So it's important that you ride the momentum, which means I don't have to predict what the market's going to do. I just have to react to when I see momentum entering the market, and me just try to jump along for the ride. That's the whole basis of my strategy.
I
So
totally understand. And I never I've never practiced that one. I never practiced that one. It's only been, I'm just now getting that chalk down. And then that momentum, I guess I have to get in that. But I know you told me about the pushes. Like, I know this is 1 push. This is, maybe 2. I know this is 3.
Oh yeah.
And yeah, whatever.
Big thing being a price action trader is I'm always looking at candles, right? When I start seeing wicks, long wicks to the bottom side, I'm not seeing candles really break through it. That's not showing very much strength. That's showing likelihood that price will reverse. And that's where you have to say, all right, the probabilities of price going down probably will have to go back up, will probably not be high. And then because of that, you don't want to take a loss on a trade where you can see that, all right, the likelihood of my trade idea is not valid, because anything can change.
So what, in the perfect scenario, which push would you, obviously the first push, but which 1 or 2 pushes would have liked to seen on this trade right here? Can you point it out?
Preferably none. Preferably it should go on the first push.
Okay, it should go on this one then, huh?
Mm-hmm.
Okay, so by this one, bam. Okay, by this one I probably should have broke even, because it didn't. I just know sometimes it'll push and it'll come up a little bit and just shoot down. I just don't want to go break even on trade, because I have a certain amount of trades I take a day now, so that has helped me. But I know, hey, I should protect capital, but I just don't want to be break even too soon. That's why I gotta check all these things, right?
Got to, but you got to make more criteria. That's what I'm saying. So like, I don't have faith in any chalk. I don't have any faith in any chalk, any BOS. So there's additional criteria added to be able to make sure I can weed out the fake moves from the good moves. So.
Okay, well, that's good to know. Well, I appreciate it.
No problem. What are the questions y'all got?
I got one question. Would you have seen anything from the 4 hour that you would have said it was buys, or no? The 15-minute, the 4 and 15-minute was still cool.
Go back to the 15-minute. No, I mean, all I see is a bunch of consolidation. So,
But you would look for sales in here, right?
yeah, I probably would have looked for sales. There's about a couple of spots that I see that would have been interesting. But with that many times going into the POI, I would have gave up. I would have started looking for buys. Because if it's going to touch a POI.
To the POI, let's see. This is one. This is still one touch. Yeah, it didn't. It's still like one touch, right?
Yeah, but that's nothing but consolidation while multiple touches. So to me, this would have been one touch. This all would have been two touches. This would have been three touches. At this point, I'm looking also at how the market is moving so jaggedly upwards. I would just been expecting this thing to go through it, because after three touches, if it's not coming down strong, something's up.
So why is this three touches? Because I remember touches is supposed to touch it and then two touches outside without touching the POI. That's a touch.
If it's touching or not, I can't see. That third bullish bearish candle. Okay, it's not touching. Okay, cool. So then this would have all been one touch. This would have been the second touch. But I'm still looking at the fact that it's moving sideways. It's not moving downward. So that looked like, I couldn't see this before, but it looked like it wasn't touching. So I thought this was one touch. Then this would all be two touches. This would all be three. And by that third time, I'm really iffy anyways, that it's actually going to go. But I'm more or less looking at the consolidation. There's what's called strong and weak POIs, right? 3 different levels: strong, strongest, and then weak. A weak POI price spends a lot of time in it. When it's not weak, price tends to go into it like this, or it goes into it like that. So I'm looking at the weakness of this. I'm already saying, no, this is probably not going to be a strong POI.
Okay. Got it. All right. Thank you.
No problem. What are the questions y'all guys got?
Hey, what's up, Brad?
Hey, what's going on?
How's it going, bro?
Pretty good.
Solid, man. I joined the call a little late. Could you do a breakdown of your EU trade?
I'm gonna have
Please.
you watch the recording because I covered that.
You went over it already?
Recording. Yep.
No problem. Okay. Yeah, no problem.
Mhm.
Oh, cool.
Oh, Julio, I apologize. I saw your question in the chat. You had a question about any ways you can track your backtesting data. This is actually a good question. So give me 1 second, guys. I'm looking for something. Okay. So what you want to create is a backtesting journal. So like, for instance, I'm going to show you an example of mine. So like, here's my backtesting journal. And pretty much I have it in here to be able to just capture all of my data when it comes to backtesting. And I have my own basically set up where I'm able to track all the details. I put in my pictures and such like this so I can analyze what goes into my trades. But this is very helpful for you to be able to understand. And the more information that you can collect and capture, like understanding why'd you lose your trades, what are the time that you use, type frames, what did you have as far as like market structure, those pieces. This is going to help you to be able to improve your trading immensely. Then that's where you get the data. Also, by setting up those things, you can know, for instance, all right, you can be able to make all kinds of different filters, right? So like I have filters to help me to know, for instance, on the type of losses I've taken or the type of trades that I take or the setups that I take. This is all data that'll help you to be able to create an understanding of what is successful for your trading, right? The more that you are able to put more data into it, you'll be able to make decisions off of that data. Like for instance, how I was just talking to P Money about, for instance, using a 3 touches into a POI. The reason why I know this because I've done over 1,000 back-tested trades. And those 1,000 back-tested trades, I'm beginning to see that, all right, by the 3rd POI touch, it's just not probable and likely. And you'll notice that I keep saying the words probable, likely, or probabilities a lot because I don't know what's going to happen next in the market. I don't even care what happens next in the market, to be honest. What I care about is knowing that, all right, there's a high probability chance that something I'm going to do is going to work. If it doesn't, cool, I move on to the next subject, or I move on to the next trade. I make a win, cool, move on to the next trade. All of them play within the probabilities. The trade that I took today on EU getting 24R was just as probable as the trade that I took today on AU making 6R. And so that's why I say that your success and your continual success in trading is going to be a reflection of how much data you collected and being able to act on that data to be able to making a concrete plan. Every part of my back testing is always tied to what part of my plan that I follow, and it helps me develop new rules as I see things that are necessary that I need to be able to fix. Let me know in the chat that makes sense. So there's a purpose for back testing. There's a purpose for every part of your trading. And so if you use backtest to be able to develop a system that you follow, no matter what happens, the more you practice it, you're going to get rid of FOMO. You're going to get rid of fear of missing out. You're going to get rid of your heightened emotions in trading. You'll get rid of the fears that you're telling yourself that, hey, maybe I won't be able to do trading, or what happens if I lose this dollar? Because I don't think about my losses so much. In fact, when I'm backtesting, I get excited about them because if I can take a continual set of losses in backtesting, it obviously shows me a pattern of decisions I'm making because nobody chooses to pull the trigger but you. So if you constantly take losses, probably what ends up happening, you'll realize, is that when you're able to have a journal that's detailed like I does, when it has like my pictures and stuff. Let me show you an example of my journal filled out, guys, just so y'all have a visual. So this is an example of my journal. I take my pictures. This is a bad example because I did not move any of my checkbox or anything, but I always have before and after pictures. And I even put like my lessons learned so that way I know, for instance, when I took a win, why did I take a win? When I took a loss, why did I take a loss? And dang, I really didn't fill out none of these. Go back deeper into these. All right, I know this one's going to be filled out. There we go. No. All right, so you're supposed to fill out those pieces to be able to know. Hell, let me go into my trade journal. This one would be easier. Okay, so yeah, this is what it looks like. I fill out my things. I'm able to ask myself certain questions and know things that I need to know. Any kind of takeaways, also include things like my screenshots as well too. But this is just an example of just filling it out so that you'll be able to know exactly what it comes down to that you need to be paying attention in your trades. You'll be able to identify things that you maybe not have noticed in that moment, but things you notice afterwards. And then you can further take that data, add it to your trading plan, because your trading plan is the most important thing. If you're constantly getting wins and losses in your backtesting, but you don't have a plan, you're wasting your time because you're not going to replicate things that are based upon your emotions, because in the moment when you have the pressures of I'm trading with live money, or I'm trying to pass this challenge, or I'm trying to make a buck to pay a bill, you're not going to think about the things that you did in backtesting that are done. But if you put out a system and you know why you got in your trades, and you know why these things are likely to win, and you know why when you lost, why you're likely to lose, what that's going to help you to do, it's going to help you to be able to replicate it so that you can take those same statistics and same probabilities, but do it in your live trading. So that's the reason why I focus so much on you should have a trading plan. If you don't, and you're backtesting, what are you backtesting? You don't know that you're going to do those things in the live market. Some people will, without a plan, without a plan written, they probably will do it in there. But for the majority of people, which just remind you, 90% of day traders lose money every day. That doesn't mean that you're more likely to be in that 10% than you are being in the 90% who doesn't follow a plan, and then they end up taking losses. So that's what I'm gonna tell you to do. That's highly probable. I have inside S&D resources in the group. I've actually made a template to help you start out like how to do backtesting, and I've made a Notion template for how to do live. And I think even Coach Solomon also has one too. So you have access to these resources inside the Discord community so that you can take advantage of those. All right, guys. What other questions do y'all have? Oh, good. You got your plan written on a whiteboard. Perfect. Definitely also one of the things I recommend doing while you're backtesting is you should put the plan like on, I put it on, I used to go to like FedEx, I print out my plan and I would laminate it. And then while I'm taking trades and backtesting, I would take like a dry erase marker and I would check off to make sure I'm doing every part of my plan to all the way up to taking a trade. And what happens is if you do that process over and over again, it's just like Kobe. He'd be shooting in the gym. He was shooting in the gym every day, getting better and better. Or Steph Curry, you know, how many 3-point shots he's put out during practice. If you practice that over and over again, it's going to get to the point where you get to the game, it's going to become automatic. So eventually you don't need the plan right next to you. And also the little small mistakes where you see that you do things and you're like, oh man, why did I do that? You stop having those because you know your plan and you do it over and over again. But yeah, the in S&D resources, you'll find a copy of that Notion notebook that I just showed y'all, so y'all can have access to it and y'all can duplicate it for yourselves. All right, guys, I'm gonna save time for one more question. Any other questions y'all have?
I was just gonna mention, like, since before when I was backtesting, it was super unproductive because I didn't really know what I was doing. But like Brian got me to focus on market structure and just gave me homework for like I think like 2-3 months straight, and I just worked on that. And eventually I got to the point where I was able to map it out on my own and increase my backtesting data with the probabilities of knowing like what direction I'm usually in. So that also helps as well. It cuts down time on your analysis and you just know what you're looking for.
Yeah, guys, like the most important, I do not care about how tight your stop loss is. I think that that's, there's a culture now with the SMC that you gotta have this 1 or 2 pip stop. And I don't really recommend that at all. So what I recommend is that if you get the direction right, it doesn't matter if you use a 5 pip stop. It doesn't matter if you use a 10 pip stop. Price is likely to go in your direction to make more money. And if you go and refine your entry to a smaller time frame, you're going to refine the size of your stop. But at the end of the day, if the market does not go in your direction, it doesn't matter how big your stop loss is. You're still possibly going to probably either break even or lose the trade. Like you can't make up a tight stop loss to account for a lack of direction. You may be able to get some R out of it, but over time, you'll just end up blowing away your account. So the most important thing you can do with anything is direction. That's the most important thing. If I didn't have an idea that price was going to move in my direction, I would have entered that trade today. And I get paid when price goes in my direction. I can even hold it longer when price goes in my direction. But if I don't have a right system of just getting direction right 8 times, 9 times out of 10, then you're just going to lose away your account. And that's what you don't want to do. So, but all right, guys. Sorry if I didn't get to answer all of the questions. Feel free to ask me inside of Discord or ask any of our coaches. I'll have this recording up within the next 24 hours so that you can have access to this to replay this. But also, don't forget, this week we have NFP on Friday. It's going to be an interesting week. It's going to be a holiday in London, in Europe for Easter weekend. And we also have another call like this on Thursday. So if there's any question you come up in the meantime that you want to get more visual and more conversations about, yeah, definitely save it for Thursday's call. If not, I'll see you on Discord, and I wish y'all the best of trading.
Thank you, man.
All right, peace out, Brad.
No problem.
Thanks,
Until
man.
And could you give me access as well to the Notion? It says I don't have access. And the first link as well, it says the page you are looking for cannot be found. Ask the owner of the page for updated link.
okay, yeah, I'll update the link. I don't know what I may have done. Okay, but I'm gonna
Thank
go
you.
in and update the link in S&D, and I'll just mention me in questions. and then I'll tag you once it's updated.
Awesome.
No problem. All right, guys. Talk to y'all later.
Have a good day.
You too.
See ya.